We have a mounting auto loan problem. The average car payment in America today is $734 a month. Did y'all know that 48% of Americans now rely on credit cards to cover basic living expenses? Because you can do all these 5 things and have an 800 credit score, but don't have $800 inside the bank. It is tremendously unfair that you will be penalized for eliminating your debt on your credit report. How do we become consumer debt free and maximize the payments we have to make every single month, no matter what, for our benefit? I'm not saying this is going to work for every single body. Here's what I am saying. What's going on, family? Welcome back to the table. We're in 2025. Can y'all believe we're actually 3 weeks into 2025? Man, I'm excited because this year we're going to be keeping it real, keeping it practical, having practical conversations around building wealth, breaking generational cycles, and living life on purpose. Living life with abundance, wellness, and freedom throughout the entire year of 2025. You know, today we're going to be talking about a big subject that I think a lot of us really need to tap into and focus on, and that is, how do we build a good, solid, strong credit profile without racking up so much debt, right? As over the last 4 years, I have evolved, right, in my thinking of, you don't need a credit score, which you really don't need a credit score. We're going to talk about it, but what you also don't need is a bad credit score. And so my philosophy is, if I can help people, like what I've been doing over the last, I would say 2.5, 3 years, if I can help people live a debt-free life, right, but have a good credit score, so when you do go to purchase a home, you have a credit score that will get you the best interest rate. When you do go to get car insurance or any kind of insurance and they pull your credit, you have a good credit score, but you're not drowning into any debt. But before we dive in, I want to really talk about and reveal some of the truth of exactly where we are as a society when it comes to finances, when it comes to our money. All right. So the consumer debt, watch this. The consumer debt in America has hit a crisis, and it hit the crisis levels in the late 2024 last year. So I have some alarming stats I want to break down. And here's number one. A record-breaking total in debt. American households now hold an all-time high of $17.94 trillion in the last quarter of last year. That's $17.94 trillion in the last quarter of last year. Credit cards, and we're going to talk about this year, in the year of 2025. I don't really hate credit cards. I hate carrying debt and I hate paying interest on the debt. But credit cards, the average APR for credit cards is a whopping 21.76%, with those accruing interest paying an even steeper of 23.37% in interest. So if you go to the store and you purchase something and you put it on the credit card, you're paying on average 22 to about 23.5%. That's crazy, y'all. This next one gets me because I'm a car guy. You guys know I'm driving my dream cars. I'm loving the season, that God has allowed me to be in. But I don't have a car note. We have a mounting auto loan problem. The average car payment in America today is $734 a month. As a matter of fact, if you're watching this right now on YouTube and live, and on podcast, coming over to YouTube, I want you to go down. I want you to let me know, how much is your car payment? I want you to be below. Is it $500? Is it $1,000? Is it $1,200? Did y'all know that 20% of the actual car payments in America averages above $1,000? So the average car payment is $734. Out of everyone who has a car payment, 20% of those individuals are paying $1,000 a month, $12,000 a year. Times that by 6 to sometimes 7 years. But let's go back, because this next stat, I talked about a credit card APR is at 22% to average 23.5%. Did y'all know that 48% of Americans now rely on credit cards to cover basic living expenses? And out of everyone who has a credit card, nearly 53% of them have maxed out their credit card limits. So if the credit card is $5,000, they've maxed it out at $5,000. If it's $500, they've maxed it out at $500. Now we are relying on credit cards to pay our living expenses, which means we're living above our expenses. We're living above our means, and that's scary to me. Because when you start putting things on a credit card and you start maxing them out, there's no way the average person can pay them off. Which leads me to the number 5 startling stat: long-term debt struggles. You see, 40% of Americans have been stuck in credit card debt for over 5 years. And I totally get it. I totally get it. Because if we go back up to number 4, what we say? Number 4 was 48% of people are relying on credit cards. 53% of them have maxed them out. Which explains why 40% of Americans are stuck in credit card debt. But Anthony, what are we doing? Let me tell you what you're doing. Number 6, watch this one. The average American is charging about $1,500 a month on their credit card. Let's go down to my age bracket. Millennials are charging close to $2,500 a month on their credit card. For what? Here's the truth. And let me get to the last 2 stats. Here's the truth. Times are changing, expenses are rising, and our income is not. So while expenses are rising, we're not really sticking to a budget and making sure that we may have to decrease in our lifestyle. Heck, I've had to decrease in my lifestyle in certain kind of ways, because I've noticed how money is not flowing in as much as it used to 3 years ago. That's a part of life. I'm not going to maintain my lifestyle if my income is not going up, but expenses, the cost of living is going up. No, I'm going to come back down because I want to make sure that I'm not stressed. Which leads me to the 7th stat here. 43% of Americans have missed at least one credit card payment in the past 5 years. So this means on your credit report, you have a 30-day delinquency note. This means that this person was so high up there that their minimum payment they could not make. Which, what we start seeing is when people can't start making credit card payments, when people are living above their means, what happened? It's number 8. Nearly 24 million Americans now have a personal loan. This is a 5.3% increase from 2023. The average borrower with a personal loan is borrowing about $12,000. And I want to end with this one as we're going into today's topic of how do we have a decent credit score? How do we have a decent credit report that helps us get into a mortgage, that helps us get the right insurance quote, that helps us gets that job, not helps us borrow liabilities. No. Because did you know delinquency rate across all debts are up 3.5%. This is with credit cards, auto loans, and mortgages are all showing a troubling trend of jumping up. And here's the reality. This is where we currently are, that people are struggling. But here's the good news. There are ways to build credit responsibly, safely, and affordably without adding to these alarming numbers. And that's what we're focusing on this year. That's what we're going to be focusing on today. This is why I really want to thank the sponsor of today's show, Kickoff, who has partnered with me to help you all, help you and I build a credit score without ruining our financial futures. As a matter of fact, Check out this quick ad, and I'll be right back.
All right, fam, let's have a heart to heart. You all know that I'm all about helping you get your money. But let me ask you this question. How's your credit report looking? And if you're being honest and you're saying, you know what, Ayo, I need some help, well, listen, I got something for you. Listen, I know credit can feel like this big, confusing thing, but with Kickoff, it doesn't have to be. They've designed a super simple, affordable way to help you build your credit, whether you're just starting out or need to bounce back from a rough patch. Here's how it works. Kickoff reports to the major credit bureaus to help you establish a positive credit history. And you can get started for as little as $5 a month. No credit check, no crazy interest fees at all, no hidden fees, just a straightforward way to improve your financial standing. And here's why it matters the most, because it is not just about a number, it is about financial freedom and doors opening up for you. Do you want that dream apartment? Do you want lower car insurance and even better job prospects? It all starts with making sure you have a good credit profile. So don't wait. Head over to anthonyoneal.com/kickoff. That's anthonyoneal.com/KIKOFF and start your first month for just as little as $1. Listen, it's anthonyoneal.com/kickoff, KIKOFF. You get it for $1. Let's get you some lower rates, especially in 2025. Brothers, I got something special just for you. Hey, did you know that nearly 80% of men are living paycheck to paycheck? Did you also know that the majority of men, specifically African-American men, we do not have a financial plan for success when it comes to our money? That doesn't have to be us in 2025. And as a matter of fact, I'm going to make sure that if you're in my community, it's not. That's why I'm inviting you to a brunch in business, Men Mastering Wealth Principles on February 1st, 2025 at Flavor Trip. For just $50, men will gather together, men only, and you'll get a gourmet brunch, connect with like-minded men, and learn the proven strategies to take control of your finances, build wealth, and start the legacy process this year. Listen, all you have to do is head over to anthonyoneal.com/brothers. Again, that is anthonyoneal.com/brothers. Seats are limited to 100 men because I wanted to keep this as an intimate thing. And I promise you, you're not going to miss out. Head over to anthonyoneal.com/brothers, register, and hey, first come, first serve.
So listen, check out my friends over at Kickoff. We're going to drop all the information inside of today's show notes. To all my brothers, man, I would love to see you on February 1st. It's going to be absolutely amazing. No, you can't bring your girlfriend. No, you can't even bring your children. This is a time where I'm going to create a safe space for men to come together, and we're going to talk about how do we take back the seat at our table as men. And as a matter of fact, man, my brand new book, I don't know if y'all can see it on the screen, it's getting a little blurry right here. My brand new book came out this week, Take Your Seat at the Table. And man, listen, we are giving away, watch this, if you buy one this week, if you buy one between January 13th and January 17th, if you buy one, I'm going to give you another one for free. So it's a buy one, get one free. It is $20 on Amazon. We're going to drop the link inside of today's show notes. And not only that, if you go to the website, we're going to give you one for free. You'll get this book, get one for free. And also check this out. I'm going to give you 2,000 bonuses for just buying it this week. Now, if you buy it outside of the 17th, you just get the book and it's still worth the $20. But this book is one of the best books I have ever written. I am so excited about this book. Let me make sure I get this right here behind me because I want y'all to see it throughout today's show. But I'm ready to get into today's topic because this is very important. All right. Listen, before we can really, get into how to build credit without debt, we first need to understand what makes up your credit score, and it's influenced by 5 factors. And I really want you to understand this. I'm gonna break this down for you. All right. Number one, the number one thing is going to be your payment history. All right. So when it comes to your credit score, there's 5 main things. There's 5 pieces of this pie that determines your credit score, right? And that's your payment history. You see, paying bills on time is the biggest piece with this. I just want to rephrase that. Paying back your debt on time is one of the biggest piece to obtaining a credit score. Now, how do I say this? we should not have too much consumer debt on our credit report. If I was to pull my credit report today, you would see my real estate. And you would see some old stuff that I had from years ago that I paid off. But now I'm able to have an 800 credit score simply because of the assets that are on my credit report that are not liabilities. Now watch this. It's still debt. It is still debt. But these are assets. These are mortgages that I have that is going towards wealth building. That is my home. Now I have an 800 credit score, which leads me down to the second part of the pie is your credit utilization. Okay. This is how are you using the funds that they're giving you. So for an example, another financial advisor was like, hey, if you get a $10,000 credit card, put no more than $3,000 on that credit card. Keep your ratio below 30%, right? And so this method, not this method, but this piece, the second piece of the pie is how are you using your debt? Pretty much. Are you using all $10,000 of the debt of the money they gave you? Or are you keeping your debt ratio down to 30%? Here's another one. Length of your credit history. So they say, how long have you been in debt? And isn't it funny that they reward you for how long you stay in debt? So if you get into debt in 2015 and you still have that same credit card, that same personal loan, that same thing, they reward you for keeping the debt and paying on it, they say, right? Some people will say, man, the longer you can have debt, the better you are. So the longer I'm in debt, the better I am. Okay. The next piece of the pie is the credit mix, AKA the debt mix. You see, when you're going into particular banks, some banks honestly want to see a variety of accounts, like loans and credit cards, etc. That's what some people would say. When I went to get my home, man, the fact that I had, and we're going to talk about this, the fact that I had money in my savings account, the fact that I had money set aside in my investment portfolio, and I only had real estate on my actual credit report with some other things, like I had paid off student loans and et cetera on there that I paid off in the past. I mean, even car loans, I'm being honest, that I paid off in the past. They're like, yo, you're a perfect candidate. I didn't get declined. I didn't get denied. Now, I was told that my insurance quote was a little bit higher because I didn't have a lot of different credit things on my credit profile. This is where my friends kickoff come into play, right? And so I was like, okay, that's not a problem. But then here's the next thing that really bothers me. Not really bothers me, but this is how your credit report is really added up, is new credit inquiries, okay? What kind of debt are you going after? How often are you going after debt? So I really want to break this down again. I want to break this down one more time. And Ed, let's put the graph up on the screen if we had one made for the show. Your debt history, payment history, your debt utilization, credit utilization, your debt history, your length of credit history, your different kind of debt accounts, which is your credit mix, and how many new accounts are you going after? Credit inquiries, debt inquiries. Isn't it funny though that our credit score has nothing to do with how much money we make a year? Isn't it funny though that Equifax, TransUnion, Experian cannot get a glimpse of our savings account? Can I get a glimpse of our checking account? Can I get a glimpse of what we have in liquid cash and have that go towards our credit report? Because you can do all these 5 things and have an 800 credit score, but don't have $800 inside the bank. You can do all these things, have an 800 credit score, but don't even have $800 invested into a mutual fund, into a brokerage account. $800 even into your Roth 401k, your traditional 401k. You can have an 800 credit score, but don't even have a 529 for your kids. this changes. And I've come to understand, you guys, that it is important for us to have either a no credit score with a lot of money or a good credit score so we can pay less interest when we go to finance a home, when we go to get our interest rates. But I do not want you having a negative credit score. I don't want you having below a 600. I don't want you having anything negative on your credit report. Negative. This is why today's show was sponsored by Kickoff, because recently I've partnered with them and I've joined them and I've used them, and I'm going to give you all some things that I've personally used that before I even bought my second home, I even used these accounts, these particular things to help me get more things on my credit report that wasn't necessarily debt, if that makes sense, right? Now, yes, they got to give you something, but I'm going to keep it a buck with you. You don't have to use everything that they're giving you. Like, for an example, I may say go to SoFi to get a savings account. When you get a savings account, a high yield savings account from SoFi, they're going to offer you a credit card. They're going to offer you these things. Listen, y'all know how I roll. I'm trying to get you the best bang for your buck. SoFi is going to give you the best bang for your buck when it comes to a high yield savings account. Now, when you get in there, you got to be wise to use the tools to your benefit, not necessarily all of their benefit. And it's the same thing that I have in place with Kickoff, right? Kickoff helps you build credit without credit cards or any hidden fees. Honestly, it is the safest, simplest, and most affordable way to improve your credit. Plans start just as $5 a month, and payments are reported to all 3 major credit bureaus. So this is your Equifax, this is your TransUnion, this is your Experian. There's absolutely no credit check. There's absolutely no interest. There's no hidden fees. So you literally sign up in minutes, right? No hassle. Choose the basic plan, the premium plan, or their ultimate plan. Listen, y'all, don't even worry about the ultimate plan if you don't want to do it. Get the basic or the premium plan. I'm on the basic plan, $5 a month. You just pay on time, and you're going to watch how your credit profile is growing. And here's what I love. I saw one account of one of my friends. Their users went, their credit score was, I think it's like at a 580. And it raised like a 610 within a matter of, watch this, 30 days. 30 days. Kept going. And I was like, I like this. I do like this. And I was like, this is a no-brainer. That if you've been looking for a safe way to build your credit safely, Kickoff is the answer. Kickoff is the answer. This is why today's show is brought to them. It's brought to you by them. All you have to do is go to anthonyoneal.com/kickoff, and you'll be able to sign up today. Now, I want to give you some other ways that I've personally used in the past to help build, you know what I'm saying, my credit that we do on an average, not an average, on an every single day basis, right? Most landlords, here's the truth, and property management companies do not report your rent payments to credit bureaus. However, did you know that you can use a third-party service to have your rent payments included on your credit report? I did this when I first moved out to Tennessee. I was like, man, you know I want to get a home, and so I was like, but I don't want to take out a credit card. I don't want to borrow no money. But there has to be a way. There has to be a way that I can have something reported to my credit report that is no debt, but it's showing that I'm making good payment history. Because I'll never forget when I paid off all my debt and I went to get car insurance. My payment went up because I had nothing active on my credit report. Nothing active. And the guy said, man, if you came back as a non-active, so to us, you're somewhat of a liability. I was like, yo, bro, I'm not, though. I don't have any debt. He said, I get it. But we don't know if you can make payments on time. And for us, making payments on time is important. So your premium is high. I had just bought a nice high-end car, and I was like, wait, what? So I just started paying the stuff, and then I just started doing some research. How to build credit without racking up debt. And then I learned about popular rent reporting services. For an example, like renttrack.com. They report to all three major credit bureaus, Experian, Equifax, and even TransUnion. What you simply do is you'll make your payment through RentTrack. RentTrack will play your landlord. Once you make that payment is accepted, it is honestly now reported to your credit report on all three. So let's talk about this. Let's say that you go from you have nothing on your credit report, but every single month you have to pay $1,500 a month in rent. So now you got a good payment history of $1,500 on your credit report. That's no debt. That's no credit card. That's no personal loan. But now you have this huge payment being reported. That's going to help jump up your credit score. Now, here's what I have learned, that RentTrack doesn't report and doesn't work with all major apartment complexes. So there's another service that I found out about. I'm doing some research called Experian Rent Bureau. Works with landlords or managers to report your rent directly. So I want you to check out. We're going to put these inside of today's show notes. You got renttrack.com and you have Experian Rent Bureau. All right. There's another one that I'm really learning about. I haven't done too much research on them, but I just had a friend tell me about them because they know I'm into the space. I was like, yo, have you heard of Is this you? How do you say that, Ed? I think I'm saying it right. Isuzu. Yeah, Isuzu. I haven't heard this one, but they also report your rent payments and they also offer some financial literacy tools. Now, I don't know if I trust their financial literacy tools again, but I love the fact that if rent payment, if the Experian doesn't offer your particular landlord, this particular landlord actually works with a lot of like your home. If you're renting a home and it's not through a big company, they can work with you there as well. All right. Now, this other one I have used is called Level Credit. Watch this. We're paying our utilities every month. We're paying our light bill. We're paying our water bill or gas bill, depending on where you are. We're paying that every month. I actually use them to this day. They allow you to report rent and other utilities. So I use them more so for my utilities. That's how my credit score is able to be a little bit higher, because I'm making sure, again, that I'm not racking up any debt, not borrowing any money. But if I have to spend out this money every single month, why not get a little bit of credit? Why not get just a little bit of credit for it? Why not? You can do with them, I think you can do anything from like your subscription bills, your utility payments, even your Netflix and phone bills, your cell phone bills, Verizon, AT&T. Those companies are not traditionally reported, but if you pay them, they pay the people, they will give you credit on your credit report. Now listen, I'm not saying this is going to work for every single body. Here's what I am saying. If you're on this mission this year of eliminating your debt, it is tremendously unfair that you will be penalized for eliminating your debt on your credit report. Because let's just say some of us, we're trying to get our debt ratio down. We're trying to become consumer debt free so that we can go buy a house. So that in 2026, we can go build our dream home for our family. But because we're eliminating the debt, our credit score drops. When our credit score drops, now if we're not going through a manual underwriter, now we got to go through another bank and we're going to get dinged on that and get a lower interest, a higher interest payment, a higher interest rate, simply because we're trying to be consumer debt free. So my thing is, how do we become consumer debt free and maximize the payments we have to make every single month, no matter what, for our benefit. For our benefit. For our benefit. Now, there are some other services out there that I want y'all to check out that I've learned from my landlord, not my landlord, Lord Jesus, from my lender who gave me my couple of my home mortgages. This is called the Experian Boost. This is a free tool that allows you to include utility and streaming services payments, i.e. phone, again, electricity bill, Netflix, in your Experian credit report. And honestly, it could provide a quick boost to your score. So let's say you're trying to go and get a mortgage rate and you need another 10, 20 points to get across the 700, get across the 710. This allows you. All right. These are companies that I think that will be absolutely amazing for you to have. Listen, 2025, I'm focusing on doing 30-minute shows because I want to give you all direct information and get you in and get you out. I want you all to check out my friends over at Kickoff. We spend $5, $10, $15 on lunch. Why not sacrifice lunch one day, eat at home, give Kickoff $5, get your credit score up so we can get you into a home, get you refinanced into the right payment of your home. And honestly, I even got another company that I'm thinking about partnering with that can guarantee you a 3% interest rate. I'm doing my research on them. That this year in 2025, with interest rates still right around 6%, and our mortgage experts are saying that they don't believe we're going to see another drop down to 3 or 4%. I found a company that is saying that they can get you into a home for 3%. So before I talk about that, I need you to get your credit score decent. If you're drowning in debt, I'm gonna have Michelle put inside of the show notes my free ebook to help you get out of debt using a debt snowball. It's 50 pages long. I'm gonna walk you through the step-by-step process on how you can get out of debt, right? And get out of consumer debt. Listen, I am not saying go out there and build your credit report. That is super important. No, what I'm saying is we're still gonna eliminate debt this year, but how do we utilize things that will not put us back in more debt, but it will still position us? How do we utilize the system to our benefit, not to their benefit? And we do that. I want to go to the scriptures before we close out. Proverbs 22, and I think verse 7 says, the rich rule over the poor, and the borrower is slave to the lender. Say one more time. Proverbs 22, verse 7, that the rich rule over the poor, and the borrower is slave to the lender. The borrower is slave to the lender. 53% of American people right now who are delinquent with their credit reports are slaves. Slaves. This is not Anthony's opinion. This is the word of God. That the wealthy, that the 1%, that the people with money rule over the poor, and that the borrower is slave to the lender. Man, 2025, a new president, and we're all stressed, and a lot of us are stressed about the president and some of the things that he may or may not do. And if I'm being honest, I don't give a crap about what he does or does not do. Because the Bible doesn't say that I'm a slave to the White House. The Bible doesn't say that I'm a slave to the president. The Bible doesn't say that the White House controls my house. The Bible says that the borrower is slave to the lender, and that the wealthy, that the rich are prosperous. It's time for our families to become wealthy. It's time for our Black families to not be slaves. I don't care about what's happening in the White House. I don't care about what goes down. No. For me and for my house, we're not going to be slaves. I'm not teaching my kids to be slaves. They didn't come up in slavery. They will know about slavery. They will learn about slavery, but they will not feel like they're in slavery. They will not have to worry and be stressed about how am I going to pay back these bills, because I've taught them how to be rich, how to be wealthy in spirit, rich in spirit, and wealthy and rich from a practical perspective. This is why on February 1st, it's super important for every Black man to be in the building. This is why it's important for everybody to get with Kickoff. to start building the credit report so we can lower our interest payments, so that we can lower any negative accounts and any negative things on our credit reports. No. This is the year, per my new book, that we're going to take a seat at our table and we're going to live a life of abundance, wellness, and freedom. So check out everything inside of the show notes for today. This is your boy, Anthony ONeal. I'm going to see you on the next show. Peace out.